Hi, my name's Emily Benoit. I'll be presenting Middlesex Hospital's financial indicators for years 2010 through 2013 on behalf of Team 3. Middlesex Hospital is a non-for-profit community hospital located in Middletown, Connecticut. It is licensed for 275 beds and serves a total regional population of approximately 250,000 people. It is the only acute care community hospital in its service area, which includes Middlesex County and the lower Connecticut River Valley region. Our presentation provides an overview of how Middlesex Hospital performed on 14 key financial indicators as compared to benchmark data from state and national hospitals. The indicators we examined can be grouped into 4 distinct categories: profitability, liquidity, asset management, and other. Next to each of the key measures, you'll see a check plus, check, or check minus symbol. This is a quick indication of how Middlesex Hospital performed compared to the benchmark data on each of these different measures. Under profitability, we examined total margin, operating margin, return on equity. Under liquidity group, we looked at current ratio, days in patient account receivables, days cash on hand, and equity financing. For the asset management bunch, we examined total asset turnover, fixed asset turnover, and current asset turnover. Lastly, in other, we calculated average age of plant, net patient revenue per FTE, long-term debt to equity ratio, and uncompensated care percent of total cost. When one considers all 14 financial markers, a larger picture of the hospital's financial health begins to emerge. The first financial indicator we examined is total margin. Total margin is a measure that examines a hospital's revenue as a function of its expenses, and ultimately it measures its overall profitability. Middlesex Hospital's total margin was above the Connecticut median for all 4 years. However, after peaking in 2012, it began to trend downward. What this means for stakeholders is that Middlesex Hospital earned 6.71 cents on each dollar of revenue. This is compared to the median benchmark of 5.64 cents per dollar of revenue taken in. The second profitability indicator that we examined is operating margin. Operating margin measures a company's pricing strategy and operating efficiency. It's a measurement of what proportion of a company's revenue is left over after paying for variable costs of production such as wages, raw materials, etc. In the case of Middlesex Hospital, their operating margin ratio was higher than Connecticut median for all years and was significantly higher in 2010. The hospital's operating margin trend roughly follows the state median. Implications for stakeholders would be that Middlesex Hospital operates at a much lower cost percentage than the state median, showing that it is much more efficient than its competitors. The last profitability indicator that we examined is return on equity. The return on equity metric reflects the percentage of shareholders' equity returned as net income. It provides a return on investment figure to shareholders. And Middlesex Hospital's return on equity was well in excess of the national median. The hospital's return on equity did drop off dramatically in 2013. What this means for stakeholders is that Middlesex Hospital's return on equity has trended well above the median, showing that this organization utilizes its investment capital very well. In 2012, Middlesex saw a large decrease in return on equity. We believe this represents a large payout to investors or creditors. Let's now move on to the liquidity group of financial indicators. The first measure that we'll look at is current ratio. Current ratio measures a hospital's ability to pay back its liabilities and/or short-term obligations with its assets. The current ratio for Middlesex Hospital was well above the benchmark data for the years 2010 through 2011 and 2013. Unfortunately, in the year 2012, the current ratio dipped slightly below the Connecticut median. What this means for stakeholders is that Middlesex had a much healthier amount of assets versus liabilities, In other words, unnecessary and excessive debt has not been incurred. The next liquidity indicator that we looked at is days in patient accounts receivable. Days in patient accounts receivable is the average number of days that an invoice is outstanding before the amount is collected. In other words, how long it takes to receive the money for the services that have already been rendered. Days in accounts receivable for Middlesex Hospital was below the amount set in the benchmark comparison for the years 2010 through 2013. What this means for stakeholders is that Middlesex Hospital collected on outstanding patient accounts quicker than those other hospitals represented in the Connecticut median. This finding indicates that Middlesex Hospital has a productive collection system and waits less time for payment on accounts receivable. The possibility of credit being extended to Middlesex Hospital could be positively affected as their collections methods are efficient. Another key liquidity measure is days cash on hand. Days cash on hand measures the number of days a hospital could continue to operate given its current level of cash and operating expenses. Middlesex's days cash on hand measurement far exceeded that of the Connecticut median for all years from 2010 through 2013. What this means for stakeholders is that Middlesex Hospital can fund their operations for a longer period of time with their current level of cash and operating expenses when compared to the Connecticut median. The final indicator in the liquidity category is equity financing ratio. Equity financing ratio is an indication of a company's investment leverage or solvency. The higher the equity ratio, the less financed a company is. Between 2010 and 2012, Middlesex Hospital had equity to assets ratios of 36.9%, 34.3%, and 36.3%. In 2010, Middlesex Hospital owned 36.9% of its assets. In 2013, Middlesex Hospital enjoyed a 57.4 equity ratio, which is notably higher than the prior 3 years. The average equity ratio among Connecticut hospitals was 41.1% in 2010, 37.2% in 2011, 35.9% in 2012, and 45.5% in 2013. Implications for stakeholders are that initially during the period, Middlesex Hospital assets were more financed than the state median. However, by the end of the period, Middlesex Hospital had more equity than the state median. Now we'll move on to the group of indicators that measure how an organization manages its assets. The first measure that we will look at is total assets turnover. Total assets turnover measures the overall efficiency of the organization's assets to produce revenue. It compares the sales of a company to its asset base and is used to evaluate the operations of a business. Middlesex Hospital was below the U.S. median for all 4 years of data collected. What this means for stakeholders is a higher total assets turnover would mean a greater financial return to the organization's stockholders. Middlesex total asset turnover is consistently lower than the national benchmarks. This indicates to the stakeholders that the hospital needs to make a more efficient use of its assets in order to create revenue. The next asset management indicator is fixed asset turnover. This ratio compares a company's net sales to its net fixed assets. It also evaluates the operating performance of an organization. Middlesex Hospital data shows that its fixed asset turnover ratio was below the U.S. median for all 4 years reported. What this means to stakeholders is that since the ratio is below the U.S. median, Middlesex Hospital may need to revive their sales to increase their operating performance. Middlesex Hospital may have invested money in areas of the hospital that did not increase its performance. The last asset management indicator examined is current assets turnover. Current assets turnover measures an organization's ability to generate sales through its current assets. A higher ratio compared to other companies in the industry would indicate a high usage of their current assets. The consistent increase for Middlesex Hospital would prove that they are decreasing their need for money from multiple sources. What this means to stakeholders is that the current asset turnover ratio shows Middlesex Hospital stakeholders that the organization is making efforts to improve efficient use of its assets to create revenue. The continuous increase in ratio is a positive sign and indicates that the company is improving their management of its policies and inventory, accounts receivable, cash, and other current assets. We'll now move on to the last group of financial indicators categorized as other. The first measure we'll look at is long-term debt to net assets ratio. It's the percentage of an organization's assets that are indebted to its creditors. A higher long-term debt to equity percentage is considered undesirable. Middlesex Hospital's long-term debt to equity ratios in years 2010, 2011, and 2012 were 47.7%, 48.1%, and 39.3% respectively. When comparing the benchmark data from Connecticut hospitals, Middlesex Hospital's long-term debt to equity ratio remained within 6 points, with values at 36%, 41%, 42%, and 37% for years 2010, 2011, 2012, and 2013. What this means for stakeholders is that Middlesex Hospital's debt is showing a trend of steadily decreasing. As expected, based on the high equity ratio in 2013, the hospital's long-term debt to equity ratio was the lowest in 2013. Middlesex Hospital's long-term debt to net assets fell below the median in 2012, meaning their assets are less financed than average, The next financial indicator we'll look at is average age of plant. This measures the average age of a company's fixed assets, which includes its facilities and its equipment. The lower the ratio, the newer the fixed assets, and the less likely it is that an organization will need capital investments in the near future. Middlesex Hospital's average age of plant ranged from its lowest in 2012 at 9.7 years to its highest at 11.88 years in 2011. In 2010, the hospital had an average age of plant of 11.16 years and 10.4 years in 2013. It's likely that the average age of plant decreased so notably in 2012 to 9.7 years due to an upgrade or an update. The national benchmark data documents an average age of plant to be relatively flat and not varying at 9.2 years for every year 2010 through 2013. What this means for stakeholders is that this ratio is unique in the medical field, as it's best practice to keep this as close as possible to the median. This is due to the emergence of new technologies and techniques, as well as maintaining compliance within oversight organizations and maintaining competitive. Net patient revenue per FTE, or full-time employee equivalent. This measures the efficiency in terms of average revenue produced per employee. Middlesex Hospital's net patient revenue per FTE has been on a steady uphill trend for all 4 years. It seems to be comparable to the Connecticut median. However, Connecticut median shows a greater gain from 2010 to 2012 and then a loss between 2012 to 2013. What this means to stakeholders is that Middlesex operates at a relatively low level of efficiency when compared to the state median regarding employee numbers. A positive uphill trend can be maintained through productivity growth, downsizing, or a leaning of the organization. Middlesex Hospital can surpass the Connecticut state median through adoption of a lean culture. The last financial indicator we looked at is uncompensated care percentage of total cost. This is a ratio comparing revenue received to care for which payment was never received. Middlesex Hospital is far below the U.S. median for uncompensated care. Both the U.S. median and Middlesex Hospital have seen decreases in uncompensated care. What this means to stakeholders is that Middlesex has less risk associated with lost reimbursement and less lost revenue than the national median. Middlesex also appears to be reducing lost revenue annually. In summary, Middlesex is doing well overall with regards to profitability, liquidity, uncompensated care reimbursement, and long-term debt to equity ratios. Downward trends in profitability ratios must be monitored and addressed if decreases continue beyond acceptable levels. Asset management and age of plant ratios indicate an aging of facilities that may need to be addressed in the near future also. Current strong profitability, liquidity, and solvency may allow for financing and/or cash in order to address facility needs. Finally, Middlesex should continue to address its lower than benchmark ratio with regards to the revenue per full-time employee through productivity, lean culture, and other such approaches.